All right, we're done with that. What's up, sons? It's Blind Rod with Son of a Tech once again, and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Matthew in real life and Blind Rod on the internet, and today we're going to talk a little bit about, well, GPU mining, of course, but primarily we will be still covering a lot of articles. We're going to be talking about Bitcoin miners, MicroStrategy, and all of their stock prices going up since Bitcoin hit 50K. We're also going to be talking about inflation in Argentina and their crypto caves to avoid Bitcoin and to still invest in US dollar stable coins. We'll talk about the Solana outage because that is a thing that happened, but seems like outages don't even matter with Solana. And then we're going to be talking about the new algorithm for Meowcoin, which is now in testnet. I have not messed with it. Maybe we will at some point, but that is something of note. And finally, Neta has agreed to do a one-to-one swap for Ceta. And that means that if you were invested in Neta on the Ergo platform, you now have an option of at least transferring that over into Cardano network and actually having, wrapped Bitcoin on their network. So that is definitely a welcome change to what was happening with them previously. We're also going to be talking about new releases from Team Red Miner, LOL Miner, and BZ Miner, as well as a new mod for resizable bar on older platforms, maybe allowing you to mine with them Intel GPUs on older platforms. Let's go ahead and get into it right after a word from today's sponsor. Today's sponsor is Build a Mine Bootcamp. I met Scott at the Crypto Mining Conference in Round Rock, Texas, where he assisted in helping put together that conference and visited one of his ASIC repair courses as well. I say all this to let you guys know that I am confident in my experience with Scott that he is the man to put this type of thing together successfully. In the Build a Mine Bootcamp, Scott will teach you how to avoid costly mistakes in building out your first megawatt of Bitcoin miners. You'll get a detailed roadmap and extensive planning checklists. You'll learn how to find the ideal site and get the best electricity rates. By the end of the bootcamp, Scott says you'll leave with spreadsheets, a working budget, and a design plan that you can take to your investors, contractors, team members, or whoever else you are working with to build your mine. Scott's goal is to help you do all this and get your mine built in less than 90 days. So take 30 seconds, go to www.build-a-mine.com/son. I will have the link in the description below as well as the pinned comment. Then once you're there, click the I want to attend button and you will quickly be on your way toward mining 1 Bitcoin per month. And welcome back, everyone. So apologies for not doing our normal Sunday stream. It does look like this next weekend I will be busy on Sunday as well. So looks like for now we're going to be doing some sort of weeknight stream. It's not great for me because it's a little difficult to, well, get sleep and get rest and all of that. But I do have work this evening as well. So it is what it is. We're going to get the work in and we're going to keep going. But let's go ahead and start, not stop. Let's go ahead and start with the latest article about Bitcoin going over 50,000 and how it's influenced mining stocks and MicroStrategy. Bitcoin miners MicroStrategy stock rally as Bitcoin price hits $50,300. Bitcoin mining stocks and MicroStrategy notch double digits gains as Bitcoin's price hits a 2-year high. Bitcoin's rebound to a 2-year high at $50,363 on February 12th has positively affected crypto and mining stocks. MicroStrategy and crypto mining stocks recorded double-digit gains over the last week, somewhat mirroring Bitcoin's 17.5% gains over the same period. MicroStrategy shares rose by 11% over the last 24 hours to $719 and have gained 33% over the last 7 days. The software company and its founder and chairman, Michael Saylor, are renowned for their support of Bitcoin as digital gold and a store of value, and the company's massive Bitcoin holdings. The company now holds 190,000 Bitcoin worth $8.1 billion in its treasury as a hedge against inflation. The firm bought an additional 850 Bitcoin for $37.2 million in January, according to Michael Saylor's February 7th post on social X media platform. MicroStrategy became the first publicly listed firm to add Bitcoin to its balance sheet in December of 2020. Since then, its share price has grown by more than 300%. This growth has been observed moving in tandem with the flagship cryptocurrency, suggesting a strong correlation between MicroStrategy and Bitcoin, which is kind of a no-brainer, right? The chart above shows that the price reached an intraday high of $712 on February 12th, the same day as the high in Bitcoin at 50,363. The correlation coefficient between MicroStrategy and Bitcoin now stands at 0.94, suggesting a strong relationship between the two. Bitcoin mining stocks also have been following the Bitcoin price growth, and this is specifically Riot Platforms, one of the largest Bitcoin mining firms by market capitalization, registered 55% gains over the past week. Since hitting a low of $9.64 on January 19th, the Riot price has soared 70% and reached an intraday high of $16.35 on February 12th. One of the largest Bitcoin miners, Marathon Digital Holdings, has also posted 60% gains in the past 7 days. Hive Blockchain Technology saw its stock rise by 28% in the same period, while MVIS Global Digital Assets Mining Index is up by 108% so far in 2024. The growth in Bitcoin's price increased the profitability of miners even as conditions became more challenging ahead of the halving. The rise in Bitcoin mining difficulty is a sign of the maturity and robustness of the Bitcoin network. It attests to the network's capability to attract mining infrastructure investments, with miners seeking to remain profitable with the expected decrease in block rewards. Data from CoinWars shows Bitcoin's mining difficulty level reached an all-time high of 75.5 trillion hashes on February 12th. However, Luxor hash price index, which quantifies how much a miner makes from the power used on the Bitcoin blockchain, has increased by 16% this week. This reflects increased rewards due to the growth in the price of Bitcoin. And that is the big story here, of course, is that mining is back on its return. But then we have the halving coming right up in April. This is really where we're kind of at parity right now, between that $45,000 and $50,000 mark that I've been talking about us needing to hit before the halving in April, and we're only 2 months away, so it's not surprising that we've actually hit it. Basically, just bringing this up to show you guys that the cyclical nature of Bitcoin still holds true, regardless of what any mainstream media tells you on a day-to-day basis. Everything's going to be based around the cost to mint Bitcoin, and we are going to see that adjust out as necessary. Now, we're seeing a 16% increase in the yield for mining as far as compared to a US dollar value, right? And that still is going to have to go up to like 100% for us to really maintain that profitability that we currently have. So there's still quite a bit more growth that could happen coming up and caused by the halving. And at least that's what I'm expecting, right? So the strategy here is, of course, well, take those underclocks off of your Bitcoin miners and start hashing away, because you're only going to have so much time before you run out of the capability of mining blocks at 6.25. And that is really, or 6.5, right? Down to 3.25. So this is really where we're at. Or is it 3.17? Anyways, from 6 to 3 effectively, right? And this is what we need to be paying attention to. And of course, that's going to influence the rest of the market, which can be, of course, good for GPU miners as well, especially considering the fact that a lot of the halvings of different GPU mineable coins aren't necessarily in line with Bitcoin. But there is one that you should pay attention to that I've been paying attention to that does line up pretty closely with Bitcoin that might compound the halving effect of Bitcoin along with itself, and that would be Radiant. So I'm definitely keeping an eye on Radiant, albeit not a big fan with FPGAs on the network. It's just something I'm paying attention to as far as all that is concerned. So I think that obviously hedging with some Bitcoin ASICs can be good, but it's a very competitive market. As we've seen, of course, the growth in the hash rate is insane, and it is very difficult to stay competitive within that market. I'd like to hear your thoughts and opinions. Are you hedged like myself with a certain amount of Bitcoin ASICs? I think I'm about a third into ASICs power-wise and about 2/3 into GPUs. Now, that being said, right now, I'm only running about a third of my power capacity, or a third of my equipment because of my power capacity. So I've kind of been in a pickle, unfortunately, due to some poor hosting, and hopefully I'll get that figured out here shortly, but it's just hard to find power, as many of you know. And so, I'll let you guys find out what my strategy is once I get it figured out myself. There's a lot going on these days, but good news all around for the industry, I think. And we'll start to see this obviously compound into the traditional cycle, resulting in, once again, that euphoria that will happen 6 months to a year and a half after the halving. And so with the halving coming in April, we're really looking at like October timeframe, October, November, December, really where we're going to start to see that euphoria and that fear of missing out from retail markets start to hop in. And it might even happen even sooner because, like I said, really the Bitcoin miners are going to have to keep pushing that price up to maintain profitability. And the only other thing they can do is reduce costs. But as you guys know, with the way the economy is going, just globally, as far as energy is concerned, the cost of energy is going up. And because of the direct correlation between Bitcoin and the cost of energy, we'll probably see the price of Bitcoin go up even further. That could mean, people that are interested in purchasing Bitcoin, this would be a good time to do it as well, because it's probably going to be as cheap as you can get it for the next couple of years. At least that's what I would think, not financial advice. Also, I never recommend buying, just to be clear. Always mine it, and that way you have equipment to back your investment dollars, at least to a certain extent. Don't over leverage yourself either, though, because as you see, when we have the down market again, what happens? The price of miners decrease, and if you're over leveraged on the price of your miners, well, you go bankrupt. And that's happened a lot recently. So it is what it is. What's really interesting, though, I want to go back to this topic. We haven't talked about it in a while, but cryptocurrency is a hedge against inflation. Now, obviously, MicroStrategy is utilizing the strategy surrounding Bitcoin to hedge against inflation, but there are other options that people use on a day-to-day basis in various third world countries to avoid inflation of their particular locale's currency. And one of those that's been going on for a long time is Argentina. And they're back in the news once again. In inflation-torn Argentina, locals use crypto caves and avoid Bitcoin. The interesting part here is the avoidance of Bitcoin. Argentines are using secret peer-to-peer crypto exchanges to buy US dollar stablecoins as inflation continues to soar. Argentines are using black market exchanges known locally as crypto caves to buy United States dollar stablecoins in a bid to escape strict currency controls and the triple-digit inflation of the Argentine peso. Argentines are also reportedly shunning Bitcoin due to perceived volatility. Crypto caves are underground peer-to-peer exchanges operating secretly and tucked away in non-visible places. Crypto Market Strategic Alliances Manager Guillermo Escuerdo, something like that, Escuerdo, told Cointelegraph, I tried to add an R in there, quote, is not normal commercial place with public attention. There are hidden places where one goes to with prior confirmation to meet and can change their local fiat money against cryptocurrencies, mostly USDT. Escuerdo, I'm going to keep saying that wrong, has said that locals can get a far better rate than the official exchange if they use crypto caves. Local banks cannot officially accept US dollars, so crypto wallets have become popular to store dollar-pegged stablecoins like Tether. Quote, having the ability to save in digital dollars allows Argentinians to save money in the long run as the local currency loses value. Ramiro Raposo, vice president at crypto payroll firm Bitwage, said in a note to Cointelegraph. Crypto caves emerged from financial caves, entities that previously operated as public money exchanges but went into hiding when Argentina brought in currency controls in the 1980s. It led to the blue dollar. Argentina's unofficial and informal dollar rate, which currently offers locals 1,115 pesos for $1. In December of 2023, the official rate hovered around 365 pesos to the dollar, but has increased to 829 pesos since economist Javier Milei became the country's new president. Argentina's inflation rate hit a 32-year high of 211% in 2023, according to the latest January 11 figures from the country's statistics agency, the National Institute of Statistics and Censuses. Esquardo said some crypto caves have been investigated and even raided by authorities. However, the crypto caves don't give off a bad image to locals, as they're one of the few places that can trade away their inflation-ridden pesos. And this is kind of the thing that I think a lot of people miss. You know, I talk about it with cryptocurrency in general and even the US dollar, and the massive inflation that the US dollar is experiencing, and eventually how that will break the backs of the public. And people will go outside of, let's say, traditional accepted realms, right, of being able to protect their investment when things get bad enough. And if you have people start flooding out of any particular currency and they're going to try to get into something else to protect, you know, basically their life savings, it's not crazy to think that that could end up being something like Bitcoin. Right now, what we're just seeing is examples of this in different countries that are flowing into, at least in my opinion, the US dollar, because that's where they feel that they'll have the biggest pump up. But I would point to BRICS, right? And say that we do have to worry and have concerns surrounding BRICS as well, kind of coming into competition with the US dollar, especially as we start to see the US dollar being used as a way to, you know, strong arm other countries into doing what the US wants them to do. And unfortunately, when you have a large economy that is growing really fast, like China, that is basically under threat of being beholden to the US by the dollar, and people push out of that, it doesn't add up to being a very promising thing for the strength of the dollar in the future. I think that personally, I think that we shouldn't have ever used the US dollar with sanctions to try to influence other countries to do anything, because the strength of the dollar is what strengthens the US. Now, yes, we could say the military as well and all of that, but it would be amiss, I think, to say that it's all military and that the US dollar doesn't have something to do with it, especially as it pertains to purchasing of energy, right? And if we talk about Bitcoin, it's a perfect representation of what the US dollar used to represent, which was the transaction of energy for a currency, right? You had everything based, the price of a barrel of oil being based on that. And I think this is also why when there were the Venezuelan, was it Venezuela? They did the Pero, I believe it was, that it got kind of blocked right away from being traded US side because it was going to be backed by future oil barrels and all of that. So it makes a lot of sense that from an energy perspective, everything's energy. I mean, that's really what everything in crypto comes down to. Everything actually in this world, in this life, everything comes down to energy, right? And how much energy you can use, how effectively you can use it, and what you are trading to utilize it for, and what that basis is. It's why Bitcoin makes so much sense from a proof of work standpoint, while proof of stake doesn't make near as much sense because it doesn't have that energy intensity that drives the price up. So going back, of course, to what does cheap Bitcoin look like? It looks like cheap energy prices. And if you don't have cheap energy prices, which it doesn't look like we'll have in the future, then it just goes to show that eventually Bitcoin will continue to rise with the price of energy and the scarcity added on top of it. This goes on to say that he went to explain that currency controls are widely expected to be wiped under Milei's leadership, which could drive down demand for crypto caves as access to official channels become available. I think obviously that's going to be necessary through and through if they want to maintain their own economic strength. And this is something I think that a lot of governments are going to miss on the crypto side of thing as well. Once again, if you put too much pressure on the public, you're going to force them into other avenues, one being cryptocurrency, and you can't control cryptocurrency. I mean, the great thing about the internet at the end of the day is that no matter how hard they try to control the internet, they can never control every single aspect of the internet. And it really kind of just blew up in everybody's faces. And by everybody's faces, I mean world governments, right? It's like now the public can interchange information between each other and come to some sort of conclusion that is typically, can be extreme in some circumstances, but can expose a lot of wrong that's being done by governments and give a path to fight back. And we just have one more piece of that to put together for that puzzle, at least in my opinion, which is the financial portion of it. And that is really coming in the wake of digital currency. And I just don't think it's something that you're going to be able to control. Maybe I'm wrong, but let me know what your thoughts are. Since the tax pressure is so high in Argentina, we will continue to have a black market that has a preference to operate under the radar of the comptroller entities, he added. He said crypto caves also exist in Cuba, Venezuela, Iran, and several African countries. In December of 2023, Argentina moved to legalize Bitcoin as a payment method for contracts, part of Milei's election promise to revamp the country's economy. Crypto market CEO Maria Fernanda Huppet, something like that, told Cointelegraph that while the change signals progress, it's not wise from a business perspective to carry out contracts in Bitcoin amid Argentina's high inflation environment. At some point, the transaction will have to convert into Argentine pesos with its inflation issues. And you agree to contract using Bitcoin as a payment method that can have daily price variations of over 10% based on a tweet. And I mean, true, I suppose you could say that you can have large price variations, maybe 10%, right? But obviously they're getting around this with USDT and stable dollars or stable coin or whatever it might be. But if your alternative is only to keep basically having an inflationary dollar that is decreasing by 10% every day, or what, crazy amounts like the dollar, like, does it really make sense that you're saying, well, use this instead of this? At least the other one goes up or down, not just down. I mean, that really is it, right? The argument for Bitcoin is it may be volatile and go up and down on a daily basis, but it doesn't just continue to go down as you print more dollars. From a corporation's point of view, that is adding volatility over volatility, he added. So it was explained that Argentines prefer to use USDT on the Tron network as fewer conversions are involved. I mean, Tron has really been, I have noticed that. I've transacted a lot on Tron. Is this something that you guys have been doing a lot as well, just due to the low fees? And if so, is that something that we need to look at again from another perspective, like a day-to-day transaction perspective? I know that Solana has pretty good fees. Polygon Matic has pretty good fees, which is going to be that layer 2 to Ethereum or the sidechain or however that works. For countries like this in this position that are trying to go for USDT, it doesn't really move off of proof of work by and large, or is there a new option that could be coming down the pipeline for proof of work that can keep fees low and influence people to utilize that network, maybe something like Casper or something along those lines? This is due to its speed of acceleration and its accessible cost, in addition to the fact that it has no variation, being its parity is 1-to-1, he said. This avoids the need to make conversions at the time of sending balances. So there we go. What we are seeing once again is cryptocurrency, regardless of whatever anybody wants to tell you as far as like Bitcoin's not a hedge against inflation. Okay, fine. Okay, fine. But cryptocurrency appears to be, right? Blockchain is going to be a hedge against inflation in some form or fashion, at least in some geographical locations. And if the economy globally continues to go in the wrong direction, everybody will be eventually forced into utilizing digital currencies because it just won't be viable to utilize anything else. And there is actually some light at the end of the tunnel here when addressing CBDCs. Because the problem with CBDCs is it has the exact same the exact opposite effect of what digital currencies currently have, which is deflationary. CBDCs are set to be kind of hyperinflationary, right? And this will be utilized to basically make sure that the money is moving fast enough and enough of it keeps moving. They keep inflating the price of everything so that you're just kind of in a continual rat race until the day you die. And the only way to get out of that is to invest in something that is scarce. And the problem with scarcity in general for most people is it's hard to obtain things that are scarce. If you want to obtain property, you have to have a certain amount of money to really be able to do that. And then you have to have continual money to continue to pay property taxes because you never own the property in the first place. If you want to own businesses, you have a whole bunch of stuff that you have to do there. If you want to own gold, you have to be able to transport that gold. If you want to own silver, you have to be able to transport any of these precious metals. With cryptocurrency, you don't have to do that. You can basically transport it in your head if you have the will to do it, and it gives you that investment into something that's scarce that people can't mess with. So just some of my thoughts as far as that's concerned. Now, Solana went down again. This was last week on February 6th. So I know I'm a little bit behind on the news here, but they did confirm outage on the mainnet and engineers were investigating. The quick take is that Solana has confirmed an outage on its mainnet with engineers across the ecosystem currently investigating. This is the first major outage for a year and follows a series of such incidents during 2022. Now, we've talked about, making fun of Solana for a long time for continuing to go down. I'm actually slightly impressed that Solana continues to function and people utilize it with this poor of service. It's absolutely insane to me. The only reason I can really think, of course, at the end of the day is the amount of VC backing and the amount of just NFT stuff on there, all that sort of thing. Crypto bros don't really care about functioning software. They only care about number go up and NFT prices and all that. It's okay, but this isn't the future in my humble opinion. You need something more robust. I think that the only thing that's going to be robust from a network perspective is something that is proof of work, because that is going to be decentralized. I mean, it's like Michael Saylor pointed out with Bitcoin. If the entire electricity of the entire world went out right now and it was out for 10 years, and then 10 years from now you booted everything back up and you booted all those Bitcoin nodes back up, Bitcoin's right back where it was, right? It didn't go anywhere. There's going to be a ledger somewhere ready to go. It's going to be golden. Whereas, anything centralized in a data center that, doesn't have, isn't as dispersed, across like as Bitcoin is from a node perspective, it's not going to be able to survive that sort of thing. Especially things that are hosted in like AWS, Microsoft, all those companies will disappear in that case. Me, or whatever, with my node sitting in, my home hard drive or whatever, it'll be ready to come back online and we'll rebuild humanity together. Anyways, a fun thought as far as that's concerned. Solana has confirmed the outage on its blockchain, causing block progression to halt. Engineers from across the ecosystem are investigating an outage on the mainnet beta. Solana mainnet beta is experiencing performance degradation. Block progression is currently halted. I was trying to see what they confirmed. So later confirmed that engineers were readying a new validator software release, including a patch to address the issue which caused the halt. Validator operators should prepare for an upgrade to restart the network. And this latest outage is the first since February 2023, according to its status page. Though still technically in beta, Solana previously suffered a series of outages in 2022 and was offline for almost 18 hours. And so I just don't think it's viable to have a network that goes down this much. And it's really frustrating, I think, from my perspective, to see it be so successful when it's such a piece of shit. It's just, I just don't get it. Maybe I'm missing something with Solana. I just don't understand, dude. I don't get it. I don't have any. But I do get that, like, now we have, I suppose, right, Hive Mappers on there, Dymo's on there. So people are making money off that. And I guess the sad fact of the matter is if people can make money off of it, they're going to use it, right? Which I understand to a certain extent. We have a new announcement from Meowcoin. Really interesting here. They are going to be changing their proof of work algorithm. There have always been complaints about Kapow. And really, every complaint from the very start of Ravencoin with X16 VR, X16 VR2, and then, of course, moving into Kapow, which was adopting a version of ProgPow, which was developed by Oh God, a Girl and that team. And that was all in attempt for ASIC resistance. And this has been something that has been basically forked to death. Everybody can use Kapow. Or ProgPow, and everybody can put it into their chain, be ASIC resistant. It's yet to be cracked at this point. I know a lot of people want to say, oh, anything can be cracked. Well, prove it, because Kapow hasn't been cracked. There is that risk, I think, of changing algorithms, and I'm trying to get an interview with them to see exactly what they're doing on the algorithm side to prevent it, that you end up with FPGAs on the network. Even Autolicos V2 could be, victim to this for Ergo, because they don't utilize a bunch of the memory. So they don't suck up enough of the memory, for example, on the mining side of things for the algorithm, to where it's a little bit easier to put like FPGAs and so on and so forth onto it. So there have been people that have been against this, people that have been for it. Obviously, their biggest reason from a GPU mining perspective to be against it, for it, is going to be that you are going to have better temperatures, hopefully, more efficiency, use less, dissipate less heat, and that sort of thing, because as anybody that's tried to mine Kapow knows, it uses more power, it gets more hot, you got to replace thermal pads and thermal paste more often, and that's even if you're trying to underclock it and everything. It's a very intensive algorithm, but that is because it is ASIC resistant. So, everything has its cost. And so the question is what's the cost for Meowcoin moving to the new algorithm? And that's going to be my big question, right? Are we going to lose some resistance here? And does it even matter? Because really, to lose resistance, let's use Ergo as an example, right? The reason why there are FPGA bit streams for Ergo, but they haven't been released to the public and they aren't utilized very heavily, is frankly due to the fact that the Ergo platform is not being utilized as heavy as other coins. And so there's not as much of an incentive to move in that direction, right? When you start to see more adoption of networks and more profitability, then you start to see that happen. So if Meowcoin gets adopted quicker, then that's when the risk of FPGAs coming onto the network from a not as resistant algorithm would come. So it may be something that never even comes into fruition, or you have to even worry about in the least. But then there's, of course, like Lithium, where Lithium now we are getting FPGAs, more than likely getting ASICs with Humpool coming online. And that is going to be the natural progression because the incentive is there. So it's all about incentives. And that's really what it comes down to. I could look at the algorithm and tell you if it's going to be more ASIC resistant or less ASIC resistant than Kapow, but it wouldn't really matter if Meowcoin doesn't get enough adoption to where it actually matters in the first place, right? So they released this announcement. Like I said, I'm going to try to coordinate something for an interview to see how the algorithm's working. Today, they have something exciting to share, the launch of Meow Proof of Work Testnet, so you can be a part of history and Meowcoin mining. It looks like they have the release here on their GitHub. Links down in the description. You do have to put it into Testnet 1, and they have a channel in their Discord if you want to go check it out. And then the GitHub miner is going to be on ZachChan 105, Meow Proof of Work Miner. And here's the notes. Currently, it only works with NVIDIA, which is like, I feel like everything always now just works with NVIDIA only on the GPU mining side when it first launches, and then AMD's like second thought. The curiosity there, I think, for me is that from a tech perspective alone, AMD is more capable right now of mining more efficiently if there was more development for it. So I find a little frustration in that. And I think it would be better for everyone involved if AMD was more pushed a little bit more in the mining side. That's just a tangent, a pet peeve of mine. But let's go on. You can mine the testnet with almost any NVIDIA GPU, but the final algorithm will have a 4 GB DAG file. The miner will have a batch file that you can use. Replace the wallet address with your own. In testing, we have found that the new algorithm to be very sensitive to memory speeds. That's good to hear. I mean, we're going to be talking about, from that perspective, another memory intensive algorithm, which does mean that we probably are going to see a decent amount of resistance against FPGA and against ASICs. If we are seeing sensitivity to memory speeds for the algorithm, that's a good note. The 4 GB DAG file is also going to help with that, because obviously it's more expensive to put those memory modules on the FPGAs. So that is what is going to be part of that resistance that helps there as well. So you may want to try locking the core low and the memory high. That seems pretty indicative of pretty much just like your ET hash or your Autolicos V2, any of that. Have fun and report what you find. So this is out. Should be really fun. I think they are going to be going live on the mainnet March 18th at 6 p.m. Eastern. So in about a month and a couple days, we'll see this come into fruition, and then we'll see, I think, the DAG size change as well. It says a pivotal aspect of Meow Proof of Work's evolution is its approach to the DAG size. Scheduled for transition at Epoch 128, Meowpow seamlessly scales the DAG size to 4 GB, a move aimed at optimizing efficiency and ensuring compatibility with contemporary mining operations. This transition involves multiplying the epoch value by 3, a forward-looking strategy intended to future-proof the algorithm against older cards operating on low electricity costs in large numbers. Meowpow's mining protocol is supported by the Meowpow miner. Oof, that's hard to say. A specialized mining software designed to operate on algorithms' intricacies. Notable considerations include difficulty adjustments and hardware compatibility, ensuring a smooth and potentially more efficient mining experience. Updates to the Meowpow miner will be closely monitored to maintain optimal performance as the network evolves. Integration of Meow Proof of Work into the mainnet ecosystem requires strategic coordination and proactive measures. Widely adopted among exchanges, pools, and mining software, Meow Proof of Work aims to minimize disruptions while maximizing network compatibility and security. Careful attention to detail will be essential in ensuring a seamless transition. They do list the work parameters here if you guys want to look into it a little bit more, as far as all the technical goes. And let me know what you guys think. Are you down with a new algorithm? We have Fish Hash coming up, right? Carlson Network's has already deployed that into testnet. It'll be coming to Ironfish. Now, Meowcoin is doing their own as well. I do think, to a certain extent, to be taken seriously within the blockchain space, you should develop your own proof of work algorithm. That I really do think so. It doesn't mean that you have to every single time. There could be other innovations within that, right? Or an amalgamation of multiple things. Say you take, like Carlson Hash is doing or whatever, you take the ASIC resistant algorithm and you plug that into basically the Caspa blockchain, and then you kind of can have something that's a little bit better than Caspa from a decentralization perspective, and then hopefully still get the speed, etc. of Caspa. If that plays out, we'll have to wait and see. I'm not necessarily sure that that's the case, because the speeds that I've understood from Carlson Hash at this point have not been on par there. But it is all up in the air. These are things that are going to have to be tested out, tried, and then see what proves out to be true. Now, a little while ago, For those that are not aware, there was the Neta BTC announcement that they were going to essentially completely ditch Wrapped Bitcoin project, or Neta, on the Ergo blockchain. And this obviously came at a big surprise to a lot of people that from the Ergo community were upset about. Obvious reasons here being that they had invested Ergo in a swap for a Neta for Neta, not a Neta, for Neta to go ahead and support that project to get Wrapped Bitcoin on the Ergo platform. And then when it was announced that they were going to essentially ditch the Ergo platform altogether and move over to Cardano and just focus there, because obviously more people are on Cardano than on Ergo at this point, that part kind of makes sense. But then they were just going to ditch out on everybody and leave a whole bunch of people holding worthless Neta within their bags. Now, the Neta Angels are also worthless at this point too, unfortunately, especially since GetBlock went under. When bear markets happen, these things happen. It's been a huge disappointment. And I think that a lot of the actions from both the Ergo side and the Neta side, as well as just the complete faux pas of the difficulty adjustment of the Ergo platform, completely destroyed that platform for quite some time. And some questionable choices surrounding their Twitter decisions and the Ergo platform handle was definitely not helpful at all with that either. But that doesn't mean that Neta should be able to just completely ditch out. And I spoke up against this, and finally, it does appear that they have announced a 1-to-1 conversion from Neta to CNeta. So while there won't be any more development on the Neta or on the Ergo side of things for Wrapped Bitcoin on Ergo, at the very least, you can swap out for some CNeta and get your Wrapped Bitcoin kind of investment portion or whatever moved over to the Cardano blockchain, at least from my understanding. The Neta to CNeta conversion portal is now live. This article contains instructions on how to use it, and it'll be in the description below. So it goes on to say that as a reminder, Neta tokens will be claimable for CNeta on a 1-to-1 basis, vested for over 2 years as voted by the community. So this does mean, at least from my understanding, when you're going to be swapping these, you aren't going to be able to suck it out right away. Keep that in mind, but at least they're doing something. I think 2 years, I mean, that might line out pretty good for a lot of people as far as the bull run goes. And if Neta is successful on the Cardano blockchain and then Cardano is successful, at least you may not end up holding just something that's completely worthless. There will be 14 days, so this is important, guys, to use the portal starting today. And following that, the tokens will start to be available for claim on Tossi drop within 7 days. If you do not use the portal during this 14-day period, we may not be able to submit your CNeta rewards to Tossi drop to claim. So it goes on to explain how to do it and then how it was calculated. So they took 3 snapshots on December 17th before the announcement of the proposal to focus on Cardano. One of the few days after the final governance vote was just confirmed on December 30th, and one at the beginning of January. Generally, you'll be allocated the amount of CNeta from the snapshot on the 17th. This would only not be the case if you had less Neta than after the second snapshot. In this case, you should expect to receive the lesser amount, or 0 Neta if there was 0 Neta in that respective wallet. If you have the same amount of Neta during both snapshots, you'll be allocated the same amount. So in conclusion, you guys can go over there and get that done. You have 14 days to do it, I think, from yesterday. So I wanted to make sure everybody that, part of my community, we had some Neta Angels, stuff like that. I'm assuming some of y'all probably had some Neta as well. You might as well go get yours swapped over. You got 2 weeks to do it. So, public service announcement, go get it done. At least they're doing something. I still think it's pretty shitty, in my humble opinion, that it's like, we're just going to ditch out completely on the Ergo platform. But like I said, at the same time, from a use case perspective and from adoptability, I kind of get it. And we're in a bear market. We're going to lose some things. We're going to shift around. Stuff like that's going to happen. In the past, we've had some issues with Intel GPUs in mining. And what I've been doing in that aspect is utilizing the ASRock H510 Pro BTC motherboard, and that has resizable bar available on it for my Intel GPUs. And I've been utilizing Intel GPUs to mine Ergo, speaking of all things, because they're very efficient at Ergo. They're even better if you dual mine and do something like Ergo plus Radiant or Ergo plus Alephium. And this makes them super, super awesome for the price point of under $200. I mean, for a little while, you were able to pick them up for like $169 a piece, the A750s with 8 gigabytes and a 256-bit bus. About as cheap as you'll ever get unless you get used RX 5700 XTs. And it was a really decent deal, but compatibility was a little rough. Good news is it looks like UEFI resizable bar mod is enabling support for rebar on old platforms. And hopefully we'll be able to see this start getting implemented into, of course, the older motherboards from Octo miners, etc. But we'll have to wait and see. If you find yourself using an older platform that does not support rebar, there's a workaround available. A rebar UEFI open source project highlighted by HKEPC and PC Gamer offers a solution that purportedly boosts gaming performance by an average of 6%. Resizable bar gained popularity in 2020 when AMD introduced its Smart Access Memory technology, which was basically a marketing name for an existing PCI Express feature that wasn't commonly used. While the feature has been present in many motherboards for over a decade, it only gained widespread attention with AMD SAM, prompting other GPU vendors to follow suit. The Rebar UEFI project operates as a boot time module, blah, blah, blah. And admittedly, it won't be universally applicable, and some platforms might require enabling 4G encoding, which shouldn't be a problem for any Octo miners that you have. Any current mining motherboards do have resizable bar, but they don't typically have smart access memory. Now, this current workaround that you need to pay attention to is that you will have to utilize Windows. But that might not be too big of a deal for you if you have a bunch of old mining motherboards lying around that have resizable bar and you want to move into purchasing some Intel GPUs, but you don't want to upgrade all your motherboards and all of that. There is an option here. It'll be interesting to check out the Rebar UEFI and see if we can get it working. If somebody in the community gets it working, please let us know in the comment section below and what your kind of results were, and if there's any negative impacts on mining comparing to utilizing a BIOS-enabled smart access memory. We have 3 new miners available now. First one, Team Red Miner version 0.10.18. I believe that's correct. And the big note here is that Ton gram mining is back. And we've been talking about gram mining over on sonofatech.locals.com. Profitability was extremely good. It has definitely died down now. I still have some NVIDIA GPUs on it. Definitely taken all my AMD GPUs off of it at this point. But this may make it interesting to try with AMD GPUs once again, because we have added Ton and Gram for RDNA 3 GPUs, and they've added dual mining with Able and Autoligos V2. And as you guys know, I've been a fan of mining Abelian because it's been pretty profitable back in November and December of last year and continues to be profitable now. So a dual mining option between basically Gram and Able is something I definitely want to take a look at. They fixed broken Kapow on RDNA 3 GPUs if you're having issues with that. Fixed loading Radeon 7 kernels in general on newer drivers. Fixed broken Able Plus Ironfish dual mining. Fixed old bug for Ironfish mining pools on like Cryptex using email as a wallet and username. Fixed broken power read for some GPUs on newer Linux drivers. Fixed broken Kapow mining on Voltiac. And patched broken job messages for the new Ton Gram pools, and added the debug logging option of network traffic for out-of-band stats for Able pools. So you can do the Hive early update. I think it's already live now, though. It did release yesterday, and I think it's pretty good to start seeing Team Red Miner start to develop again. I mean, for quite some time, we were getting very, very sparse releases, right? 2 weeks ago, we started seeing pumps back up. Last one before that was December 25th. We had a huge break between July and December. And their Team Red miner is really like the last bastion of hope for AMD miners. And it's been pretty disappointing to not see them developing as much. So I'm glad to see them back. Welcome back, guys. Welcome back. I know everybody had a little bit of a struggle through this past year, and we're all recovering. It's like we all just got like hammered, and it was like coming out of the vid again, you know, for a lot of people. We're coming back out. The miners are starting to crawl out of their caves, start building again. We're crawling up. We're going to do it. 2 days ago, LOL Miner version 1.83 also released support for Gram. And due to popular demand, they added back codes for mining TON and Gram, using TON or Gram to mine it. And then the pool connector now detects pools on lolminer.ton.ninja and gram.hashrate.to correctly with the TON mode 6. And you can add the ninja.tonlins.com with the TON mode 4. They added TON support for NVIDIA and AMD RDNA 3 generation of GPUs as well. It does have a few of notes surrounding that. NVIDIA drivers required are 525 or higher. Old TON dual mining codes in the solo mining modes are not available. For dual codes, hang on. They'll try to get them. So if you're on AMD GPUs, I think you're going to be better off with Team Red Miner right now with their dual mining capability. And then if you have the NVIDIA GPUs, obviously you're stuck with the LOL Miner at this point, or you can just utilize the Gram custom miner from the pools. Those pool fees are still really high though, so not a big fan. Those fees need to come down because the profitability is down. Feel like those pool operators probably already made a ton of money. So, you know, bring the fees down. It's ridiculous. 50% is highway robbery. 4 days ago, BZ Miner version 19.3.1 released, and he's still been working on Dynex a lot. So lots of Dynex stuff. I think he's getting to the tail end of it, but some notes from Dynex. Fine-tuning for Dynex proof of work ratio will likely give you better results than default settings. Intensity option will adjust how much VRAM is allowed to be used. And Intel Arc support still only for proof of work. That's because of the lack of FP64, and that has to be emulated, which doesn't work very well on the Arc cards. So that's been a downer on Dynex, but really hasn't hurt the value of the Arc cards in my humble opinion, because frankly, Dynex hasn't been at the top of the bucket in quite some time. Speaking of top of the bucket, let's go ahead and take a look. We have Nexalia kind of at the top now these days. Another fork of essentially Caspa using Carlson hash, and it's showing most profitable with the RTX 4090 bringing in $1.97 a day in revenue, or $2.33 a day in revenue, excuse me, beating out Pepe proof of work, which has not been holding up very strong, and Pyron hash. And so if you guys were interested in Nexalia, you can definitely go check that out and get to mining it. I think with a lot of these, it's hard because a lot of these forks, it's best to mine them, in my humble opinion, before they're already getting listed like this, because now at this point you have difficulty driving up. Makes it difficult for GPU miners in general. And that is really what I wanted to talk about, is the struggle for GPU miners. I mean, really the fact of the matter is that we're running, a majority of people are running, you know, RTX 3070s, right? And at the average of 12 cents a kilowatt hour, which is US average right now from the home miner perspective, you're really only looking at like 50 cents a day in revenue per 3070, which is not bad. And if you can get your power rate down, I mean, maybe you could get close to what? I mean, still going to be not even $1 a day in revenue on these, and the cards are still going for $300. So, you know, you are looking at like almost a year ROI on these things, and there's not a real winner within the GPU mining space. So what is the game now? And this has really been the game where I found all of my success within GPU mining. And frankly, all my ASICs are offline right now, and all my GPUs are currently online. And that's because what I've been doing is basically just speculative mining things that are not actually listed or launched anywhere. And that has actually saved the farm over the past year. Is mining stuff really hurts. It really hurts. Like, it is not fun. You're mining, you're paying $2,000 power bills out of pocket. You're just barely getting by. You know, my total farm, like operations is like $3,600 a month, and you're mining what is essentially $0, right? So you're just dumping thousands of dollars a month, and you sit back and you have to wait. But your only other option, right, is trying to essentially bounce between profitable stuff and compete with a whole bunch of other GPU miners and end up in a position where you're still not clearing your bills, and now you've spent all your crypto on power. So you kind of end up trying to balance that out. And I'd like to hear y'all's strategies. What have y'all been doing? Like I said, I've been mining yield a lot. At this point, I think I've finally gotten the number that I want on Radiant, which at this point, learning my lessons from Caspa, I'm never sharing shit with you fuckers, by the way. You don't get to know how much I got anymore. Just saying. I'm done with it. You don't get to know anymore. But I've been mining Radiant a lot, right? And stacking that. And then at the end of the day, we'll go ahead and move that around. And hopefully that will pop off with the halving or something along those lines. And then moving on to other things when those popularities come up. I have still been running on a few different ones. Some of my go-tos to give you guys ideas that are already out there that have profitability numbers on them. Like I said, Radiant, Chlor for my 5700s. Been big on the Chlor. Why am I big on Chlor? Because I utilize Chlor. And what do I utilize Chlor for? I utilize it for speculative mining. And the reason for that is that I can go rent HiveOS rigs on Chlor, spin them up into my HiveOS farm, put it on what I'm speculative mining, and go. So it looks like a rinse and repeat, right? Essentially, 5700, excuse me, there we go. 5700s come in, make me my Chlor. That Chlor goes into the Chlor marketplace. That goes into renting rigs, and then that goes into generating speculative mines, and then rinse and repeat. And then hopefully that all works out to where I can still also cover some power, and then the additional Chlor is just going to rentals. And that's kind of how I've been playing this game of like, get onto things early, stack up a bag, sit on it, and then the power bill comes around and I feel like I'm broke for like another month. But it is what it is. Let's go ahead and get into questions and answers. I'm losing my voice today, if you can't already tell. So setting up Super Chat will be the easiest for me to read, so I'll answer that first. Tagging @SonOfATech will highlight the message orange, and I'll be able to read that easier as well. Let me get some water. Someone says Carlson was a scam. I never said that. I don't know where you're getting that from. Is Alpha the best bet for GPUs right now? No, it's going to be taken over by ASICs and FPGAs. But as a dual mining option, a lithium's still good, right? The RTX 4070 Super is currently in testing right now. It's actually running Novo right here, as you guys can see. And we finished overclocks for a lithium. We finished all stock testing. And I still have to do overclocks for all the algorithms still. 7U says, I'm liking AIPG going as big as other AI mining rentals. Team just launched their second webinar. Devs and founding team seem legit. They have good knowledge of what they're doing. I don't like the name, but have they released a marketplace yet? No. I don't know. Nothing usable for me yet, so I'll pick Chlor over that. I only have one FPGA, Sam Fisher, an FK33. Alex says, that's Summit Deck. How much power do you suppose one can generate with a leg shake? Yeah, I know I have that glitch. It's been a problem. No thoughts on Solana Saga 2. Jazzcat says, did you see the Hyper announcement about making a new client? No, I haven't yet. I guess I need to look at that. Look it up. Add it to my notes. Hold on. We'll get it for next week's show. Yeah, I think I misspoke. It's Humpool is on Radiant, right? Ooh, let me go get that up. Yeah, Humpool on Radiant. Right now, it's all Radiant's taken over by Viper.net and the FPGAs, right? So. Kielbasa says, my Neta is now unstaked in the Nautilus wallet. What do we do now? I don't know. Go read the post. Go through the instructions. I can see if I can do a guide later for you. I just don't have that info for you right now. Alex asks, what's the source? My community at sonofatech.locals.com, Bitcoin Talk, Discord, all the usual suspects. Get some jujitsu content. I can't roll right now. I'm still trying to get healthy again, dude. Henry says, at Sonofatech, when solo mining, what percentage do you think is worth taking an L? I'm at 130% on Radiant. Well, then you should be getting that block anytime soon. I don't count solo pool mining as solo mining though. I think the advantage of solo mining is mining to your own node. So if you're just solo mining to a mining pool, you're basically just playing the lotto and you're giving them money to fucking do it, which is stupid. That's my opinion. Well, the reason you pay a mining pool is so that you get rid of the luck. So if you're gonna take on the luck, don't do it. Build your own node. Homebrew says, at Sonofatech, do you think a lithium going ASIC is a mistake? I think they built GPU mining support and are going to lose it if there isn't a home friendly ASIC. Well, you know, I thought we would see more people. Thought we would see more repercussions on the Caspa side of things from adoption, and that didn't seem to happen. But it would be fair to say that Lithium hasn't had the BitBoy cryptos and the altcoin dailies talk about them like Caspa did. So your grassroots miners might have more of an influence over Lithium. I don't know. That's a good question. It would come down to, you know, I think with their recent price pumps and everything, I would assume they'll be fine as far as that's concerned. I mean, they're going to have all the same problems, right? Like Caspa losing 15% of their security in a blip of one manufacturer, and bullshit like that. But that's expected when you centralize more with ASICs. Darius says, outside of a tech, in your opinion, would Nest 21 still be a decent play with the halving coming up? I feel like the prices are still decent. I haven't looked at the S21s necessarily. I mean, as you guys know, I like to find the good deals. So I bought all of the ASICs that I was interested in buying at the prices I was interested in buying them at. And personally, I'm not interested in buying any more Bitcoin ASICs at the current prices. Samir says, are you mining any Ergo? Here and there, not a lot. What's up, Hawk? Welcome to the stream. Good to see you guys. Make sure you guys go subscribe to Hawk Crypto Mining. Tech is $300 for an S19 95 terahash. A good deal right now? Yeah, I'd say that's a pretty good deal. I would buy one at that price. Toxicano says, that's Tech. Are you crypto mining Whale? No, I haven't heard of Whale. Homebrew says, that's Tech. Thanks. Another question. If I deploy in a lithium node on Flux, can I use it to solo mine? Yes, but remember, the problem with Flux is that when it goes down, it wipes all that information. So you'll have to like get the new IP and do all that stuff. I don't think they're really great with static environments yet. And you'll have to rebuild the chain, right? So there's a downtime aspect to it that is potential, that has a lot of potential for downtime. So it's probably not the best decision to mine to something that has a lot more downtime than, say, you know, a Raspberry Pi at your house or something. All right, boys. So I'm going to call it here for Q&As over here. We're going to, let me see what time it is. I got to work at 8. It'll take me an hour to get home. I might work from home. Yeah, I think I'm going to work from home tonight, boys. I have about it'll take me an hour to get home. Now I got to work 8 to 9. And I was debating staying here and streaming more, but I'm already pouring sweat and I kind of want to go to bed right after I'm done working. So I'm going to go and I will see you guys next Tuesday. But don't worry. Yes, I am testing. It's probably going to take me the rest of the week to get this tested. I have a lot of demands on my plate, working nights for a day job, taking care of kids for 2 different baby mamas, and then trying to maintain over here and keep the farm alive. It's intense. But we'll keep rocking. I'll see you guys next Tuesday.